Hey, what's up guys, welcome back to the channel. In today's video, we're going to talk about one of the major EV battery plays out there right now, Romeo Power Systems, and whether or not it's a buy here at $10. I think right now is a good time to go into a deeper dive into Romeo after we've seen a lot of increased retail and media interest following some rather significant movement in the share price. Just yesterday, Romeo announced a major new long-term supply agreement of its battery modules with PACCAR, which for those who don't know, is a Fortune 500 company in the medium and heavy-duty trucking space with over 27,000 employees worldwide. This was a huge news and has put Romeo Power Systems on a lot of investors' roadmaps, especially after trading its highest volume ever since the SPAC merger completed in December of 2020. I've personally invested in Romeo since February after I discovered it at a very attractive valuation, and I'm going to talk about some of the important plus points and positive outlooks for the company that led me to that decision in this exact video. Now before we get into it guys, make sure to drop a thumbs up and also hit that subscribe button. So doing a quick introduction of what exactly Romeo does. Romeo is essentially providing battery-based solutions to industrial transportation spaces in North America and Europe. Essentially what these guys are doing is these guys are taking cells, the lithium-ion cells, and packaging them in their own proprietary design and production language to create a custom battery pack and battery management systems. Romeo then sells these BMS softwares, BMS management systems, and these battery modules to OEMs, system integrators, and fleet managers. Now, such a wide end user market spectrum is fostered by the patented modularity and customizability for the battery packs. And this, in my opinion, is a huge edge for Romeo Power that can allow them to quickly ramp up gross margins going into the revenue realization stages. It will most certainly allow them to have better pricing power and a more efficient margin profile going forward. Romeo's big turnaround came after the company announced that it entered a long-term battery supply agreement with PACCAR. Now in this deal, Romeo will supply battery packs to the heavy truck giant for its Peterbilt 579 Class 8 truck and the 520 Refuse battery electric truck models, which is expected to last through 2025. Now this deal targets specifically US and Canadian markets, with the very first shipment of the battery expected in 2022, so just in 9 to 10 months. Now, it's super important to realize that these Peterbilt and Kenworth brands that function underneath the PACCAR parent company together account for roughly 30% of the US and Canada Class 8 truck market and take around a 20% cut of the medium-duty market. So the amount of exposure Romeo Power will be getting from this specific deal will be quite huge. And once the revenues are started to realize in 2022 and 2023, it could provide a lot of expansion opportunity for Romeo going forward into different segments and partnering with potentially even more OEMs. Now, these numbers from the specific agreement aren't actually even priced into Romeo's projections as of right now, and management hasn't even considered the amount of margin compression they might see from a movement like this. So there's potentially a little bit more value to be unlocked from this specific company, in my opinion. The company is also currently partnered with the Refuse Garbage Trucking Program and a company called Heritage Environmental Services for electrifying over 500 of their trucks with the Romeo Power battery management system. They're also partnered with a company called Lion Electric for supplying their Orion battery platform to the OEM to provide fleet customizability and modularity, which is something that that specific company is looking towards when it comes to electrifying their fleet of commercial vehicles such as buses, medium-duty trucks, and even some longer-duty trucking models. By far the biggest plus point for Romeo is their big joint venture they have with a company called BorgWarner, which is a 20% investor in RMO. Now, BorgWarner is a global automotive supplier of components with over 50,000 employees worldwide. This is a partnership that can help pursue costs down, provide competitive cost advantages due to BorgWarner's wide customer universe and supply chain exposure. This can also help Romeo penetrate into the European and light vehicle market segments, in my opinion, and smoothen the process of supplier discovery. In terms of the pipe and the amount of strategic investors that have been investing in Romeo, Republic Services has been the largest investor so far. They actually increased their pipe size right before the merger took place and actually took a board seat post-merger. And Republic Services, for those who don't know, is the second largest waste management firm in the United States. In addition, Heritage Environmental Services is also a major investor in the company. They're also a major player in Romeo's contracted revenue streams. Now here's a quick look at how the core product offering of Romeo can tailor to some very interesting end user segments. As you can clearly see, there's a very wide variety of end users that Romeo's technology can target. They have a patented collector technology inside their battery packs, which allows them to essentially be a little bit more modular and configurable for the end user. And as a result, they're able to target a lot of these different segments in the commercial trucking space, the medium duty, the heavy duty, and even the specialty trucking and busing industry. And I think this is a very good advantage for a company like this, who is potentially leading the charge towards the electrification of the specific sector. We all know how big of a polluter the trucking industry, generally speaking, is, and we're seeing a lot of OEMs come into the space to develop trucking platforms from the ground up, such as Nikola, Hyliion, and all these other big players. But you're going to require an OEM supplier in this space as well. The trucking industry, has its own battery and EV drivetrain requirements when compared to a consumer electric market. Companies like Tesla and Lucid and all these other electric vehicle players, they have completely different supply chain requirements when it comes to developing the battery packs for those cars and fitting them in the systems, because obviously they're completely different application types and they have a completely different use case. In the trucking industry, you need to be a little bit more reliable, much more durable, obviously, and much more configurable. And that's where the Romeo Power System edge comes in my opinion. They have a very configurable system, a modular system. As you can see, they have different series such as the Hermes, the Apollo Pack series, and obviously the Orion Pack series. And these are actually tested in industry right now. They have over 500,000 miles under the Orion, Apollo, and Hermes packs combined as of December 2020. And obviously they're putting more and more miles every single day and testing these, in the industry. The amount of contracted revenue these guys have down the road for 2022 onwards is going to provide an even better testing platform for this company to become a potential leader in the EV electrification space for the trucking industry. Another little industry I think could be a little bit more underappreciated for Romeo is the pickup truck space. So the pickup truck space is by far the most profitable sector of the automotive industry. We're seeing some OEMs such as Rivian and Lordstown Motors come into the space to try and target that specific segment of EVs. We know pickups are the most popular vehicles that sell in the United States, and they have a very sticky customer base. And at the end of the day, they're going to be also a sector that's going to need electrification. And there's going to be a lot of benefits that an EV platform will provide to the pickup truck segment. You're going to need some sort of supplier to be able to capitalize on that opportunity when OEMs start showing up, and they're going to require technology to be integrated into their platforms. And I think Romeo, given their backlog of contracts, their backlog of patents, and the contracted revenue they have for the next 5 years, is potentially going to be a leader in the transportation. It might take a couple of years for that specific sector to start seeing a lot more momentum towards an electrification shift, but I do think it's gonna take place very, very fast. And the amount of policy incentives and political pressure that there is gonna be for electrification is just gonna increase. And as a result, I think OEMs are going to be forced to see electrification. Even companies like Ford and Chevy are going to have to move their platforms to the electric side. And I think that's just going to create an even bigger opportunity for Romeo and their different customizable battery packs to capitalize on that opportunity and, gain a little bit more on the top line side of things. And as a result, create more shareholder value. Currently, Romeo has a 1 gigawatt capacity Los Angeles factory facility that they expect to expand to 7 gigawatts by 2025. And with their multiple established commitments on raw materials, the company expects to be cash flow and EBITDA positive in 2023 and be gross margin neutral by the end of 2021, which in my opinion signals a very significant growth ramp for the company, something that wouldn't really be possible if the management hadn't secured strong relationships in their supply chains and in their contracts. As you can see on this graphic here, they expect 2022 revenue to be around $400 million, followed by a $1.65 billion top line income by 2025. So around a 59% compound annual growth rate. Now, the big question on everybody's mind is obviously, what does this mean for the share price of the company and whether or not this is actually a good investment here? Now, this is a daily chart of RMO. Every candle basically represents a day of trading. You can see the stock kind of ran up quite a bit during the merger and the end of last year in Q4. And then it sold off a lot on a lot of volume, primarily a lot of dilution that took place after the merger. You had some warrants that were being exercised, and you just had a negative sentiment on what exactly the value of the company could be. And obviously, we had the overall market also take a big dump in February and March, which is something that just accelerated the downward trend of this company. But as as you can see on the 6th of April, this stock did see a very, very big move to the upside with that PACCAR agreement. And potentially this could be a medium-term reversal, in my opinion, on the share price. But also long-term, I do think there's a lot of value to be created at such a valuation. It's trading under $10, which is typically the floor for SPACs. So the insiders and the people that were in the SPAC and the pipe do have a conviction to keep the share price quite high. And I don't think it's going to stay under $10 for quite a long time, especially given the amount of growth this company is expected to see and the potential opportunity for it to be a leader in the electrification space. Now, here are my price targets for 2023 and 2025 using the revenue estimates that Romeo has given. Now, for 2023, I am taking a 15% conservative estimate from the projections that Romeo has given us to around $573 million in top line revenue. I'm using a value to revenue ratio of around 3.38. This was an average I took from various companies in the space. We obviously don't have a competitor to Romeo, direct competitor at least in this space, maybe Microvast, but that SPAC merger hasn't even completed yet. So I can't really use their valuation right now to judge Romeo's share price, but I'm using Hyliion, Lordstown, Nikola, and Tesla as potential estimates for the value to revenue ratio and what kind of multiple this company can trade at down the road. So taking that average, we get a roughly 3.38x value to revenue ratio. We use that to calculate the enterprise value of the company. With roughly $300 million in cash, that puts us at a $2.5 billion market cap for 2023 and a $5.9 billion market cap for 2025. The 2025 revenue estimates are fully in line with the projections that Romeo has provided us, but obviously this doesn't even account for the revenue that the company might see from the PACCAR agreement and obviously their Borg-Wargren partnership and how that's going to help them accelerate potential OEM partnerships and longer-term revenue contracts in the electrification space, especially in Europe. And that puts it at around a $18 price target for 2023 and a $43 per share price target for 2025. Now, obviously, this does not take into account any dilution or any external market forces. So obviously do your own research, but in terms of fundamental price targets, this is what I have based off the projections, based off the growth estimates of the company, and based off of where exactly the other stocks in this space are trading at. Overall, I find this a very interesting investment opportunity for the long term. I know we've had a lot of SPACs that have come onto the market, and it's been a little bit overwhelming for a lot of people. We've seen some SPACs not perform very well. We've seen some SPACs outperform other SPACs. But I do think at the end of the day, you need to kind of filter out the noise and look at the fundamentals of the company. You need to do your own research. The more time you put in, the more you're going to get out of it, and the higher chance of the investment playing out in your favor in the future. And that's why I made this video. So I hope you guys enjoyed this. Make sure to drop a thumbs up and also let me know whether or not you are considering buying RMO stock. Why or why not? I'll be interested in hearing your guys' opinions. But anyways, guys, I hope you enjoyed this video and stay tuned for the next one. Peace.